is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Gary Forni, chairman of Central Texas Angel Network, CTAN. Their mission is to identify, invest in, and support early-stage startups while delivering financial returns to their members. Having invested $129 million in 215 companies since 2006, CTAN is one of the most active angel investing groups in the United States. Gary, thank you for joining us.
Thanks for having us, Hall.
Great. And where are you calling from today?
I'm in our office here in Austin, Texas.
That's great. Well, let's hear more about you. Tell us more about your background before joining CTAN. What did you do before this?
Like many angel investors, I was in the technology space. I worked at large enterprise companies, specifically semiconductor companies, for probably almost 25 years before I decided I jumped over and started engaging in startups, ran a few of them. And that's how I met my first members of CTAN, is they invested in one of my companies. And I was so impressed with the people in CTAN, how giving they were and how not just committed to the company because they invested in, but committed to the process of making us successful. I said, as soon as I exit this company, I'm going to sit on your side of the table and work with you guys. And so that's literally how I joined CTAN, is they invested in us and I was very impressed with them.
Great. So what excites you right now?
So right now I've been focusing on, as a chairman, I have some responsibilities with respect to, growing CTAN and moving it along. And like all member organizations, it's suffered through the pandemic as everybody, kind of scattered. Many members retained their membership, but they weren't participating either actively or in an investment. And so we've actually been spending the last year and a half now rebuilding the organization. We had all the bones, we had the structure, but we needed to re-engage with the social events. We need to hire new staff because they had left as well. So training that new staff and getting them up and running and hitting the ground, moving as fast as they can. So it's been a big rebuilding couple of years. I think we're finally back to critical mass. We got about 120 members now. And that's the kind of membership we need to really have an impact where we participate.
Great. Well, tell us more about CTAN itself.
So we're a member-driven and member-led and member-supported angel network. Kind of a classic angel network would be where all the members put in their own money into deals, and a significant percentage of our investments are still like that. But recently, last year, we started a hybrid fund where we have a sidecar fund. So members who of CTAN who don't want to be hands-on involved in a due diligence, either they don't have the time to do that, or they want to have a more diverse investment portfolio, put money in the sidecar fund. And that acts just like a VC kind of LP kind of play where they peanut butter that sidecar fund against every investment we do. And so having this hybrid model, the hands-on due diligence portion plus this sidecar LP portion, really gives us the ability to support a lot more deals and put a lot more money into deals. And that's been a big change for us over the last year.
And so what does your group invest in?
We're generalist angel investors. And so when I say angel, that almost always means early stage. And so we're talking seed plus, Series A, maybe Series A plus, but not Series B and beyond, right? That's kind of VCs or PE. We do that early stage. Now, just to be clear, it also doesn't mean friends and family, right? So, you hit up your aunt and your uncle for money to start your business, and you need to do that on your own dime and their dime, that emotional dollars. We're not going to be that emotional investment. We want to see you make progress before we invest. And so that's the difference between, we like to think, that's the difference between family making investment and educated investors making investment. And so, but when we make that investment, we're broad thesis. We invest in everything. It could be software, could be hardware, could be consumer product goods, could be medical and pharma. We've seen a lot of that lately. So we invest broadly across the spectrum.
Great. Well, how would you describe the investment thesis for CTAN?
So we talked about kind of the different categories. We invest across, we're equity investors. As angels, we're equity investors. We're not giving you a loan. We're not looking for debt. And so at CTAN, unlike some angel groups, we don't do safe notes. We're not looking to give you a loan. We're looking to get equity for our investment. Now, some companies have priced rounds like a seed round where there's equity. Some companies have a convertible note, where it's a commitment to convert into equity. We're good with either of those, but we're not going to do a debt. We're not going to do a loan. We're not going to do a safe note. We're not going to do anything like that. We're looking for future equity. And I think this is the important thing that needs to be mentioned is, yes, we put money into your business, but the reality is if you just take the money and go, you've probably left the most invaluable thing on the table. So when we invest, we not only do we put the money in, we open up our Rolodexes to make contacts and connections and these engagements. And we sit and have a discussion that we can take and tap into our, unfortunately, too many years of experience, right? And so those three things together really are the value that CTAN brings. And I like to argue that companies don't run out of money, they run out of time. And that Rolodex and experience is really what shortens the amount of time to the next level.
Does CTAN look for an early exit in most deals?
No, I wouldn't say we look for an early. We do look for an exit, but we don't look for an early exit. In fact, my background is technology. Many of our backgrounds are technology. And so we're big data hounds. And so we track everything about our investments and even about the companies we don't invest in. And that data shows that, investments usually take 7 to 9 years to come to fruition, to have an exit, right? If there's an early exit, that usually means the company's going to go to zero and there's no return of capital to the investor. So we're not looking for an early exit. We're looking for to be in this for the long haul, whatever that might mean.
And how often are you swinging for the fences?
Yeah, this comes up a lot. And so my answer to that is, we're kind of like Hank Aaron and Willie Mays and you name the baseball player, we're always swinging for the fences. And so and that's not by accident. It's not just because that's our behavior. The math says, angel math says we have to have a 10x return on our money from every deal that we invest in. And so, why is that? It's because 7 out of every 10 investments we make go to zero. One or two of those investments give us our money back, maybe a little bit more. So we need that one investment that really is the long ball. We need to give us 10x back, or we can't roll that money into the next set of investment. So we are always swinging for the fences. And a lot of times entrepreneurs don't seem to get that. I had a discussion with one entrepreneur and I said, we need a 10x return. And he was hearing 10% return. It's like, we are way off on the math that it's going to take to do this. So that really is a big deal for us.
Right. So where do you see CTAN in 5 years? What will it look like then?
So if you think about running an angel network, it's devilishly hard. And the reason it's hard is it's essentially a dual-sided marketplace. I've got to bring in enough angels who are going to invest in startups that we can make a difference. And I need to bring in enough startups for my angels to invest in. And I have to build both of these up. And so I have to develop pipelines of both of those. And I have to have active engagements all the time because, startups grow up or disappear. And so I need to replace them. And I get churn on my angel side as well. So that activity of making those things happen really means I have to have a deep reach out into the community and for that matter, extending the boundaries of our community to bring in more players. And so one of the things we've started doing in the last 5 years, for the next 5 years, is how do we grow more? How do we grow more startups? How do we grow more investors? And that's starting to be working with the city, the county, and the state for them to be focusing on growing more entrepreneurship in the areas that we support. And so that's been a big deal for us recently, specifically this year. As we've reached into government, we've seen some big uptake here. And so we're going to continue to support that and have, the governments of the areas we're in bring in and grow entrepreneurial spaces and activities.
Great. So tell me more about the returns.
Yeah, I could talk about the returns. So recognize we've been around for about 16 years. So we can actually talk about returns because remember, our exits are in 5 to 7 to 9 years. And so we've had plenty of years to see that. And so I can tell you that our IRR is 30%. So, what does that mean? So that's our internal rate of return is 30%. When you look at the NASDAQ is 15%, CTAN is 30%. Now, that's stunningly good. That's stunningly good. And it's like, Well, what does that mean? That means for all of our deals that have exited, either they've gone to zero or they've been acquired or they've gone public, what is our return on investment? It doesn't count the deals that are still existing because we don't know what that exit's going to be. Only the ones that have exited. So to get a 30% return is exceptional. And we know this because we gather the data locally. And the people who gather the data locally, I've got a team of 20 people working on data gathering and compiling that data. That same team gathers the data for the country. They're members of the Angel Capital Association, so they see the output in the data for all 350 angel groups in the country. So we know the IRR 30% is that is a killer number. We're doing really well. But so what does that mean in terms of like return on cash? We call it multiple of invested capital. So we're running a 4.6x return on cash. For every 100,000 you put in, you get 460,000 back. So that's the kind of numbers we're playing with, and that happens only if you invest across every deal we do for the year, right? And so that becomes an important thing in terms of why do we create this sidecar activity? Well, people who are investing kind of in this and in that, but not at every deal, they're going to see either a spectacularly high return if the company invested in was really good, or they're going to see a low return if it didn't. If you peanut butter across, the 8 to 12 deals we'll do this year, then you're going to see our average, and that average has been about 30%.
So let's talk about the state of angel investing. How do you see the industry evolving from here?
That is the $1,000,000 question right now. And in fact, there's a lot of discussion at the national level with the VCs who are members of our angel network. And it's like, where is the state of investing going? And anybody who was trying to raise money in the end of 23, at the beginning of 24 knows it's really hard to raise money. Things are tight. VCs are having trouble raising their next round, next set of LPs. They're not getting their funds. And so getting capital is becoming more difficult. And so we're seeing valuations of companies come down because it's just harder to raise capital at the high valuations that we saw kind of in the 21 timeframe. So that's happening, and that's going to continue to happen. We're going to see some fallout here. It's a little unclear. I think it's going to be tied to interest rates as people have the money tied up in real estate and are having trouble selling their real estate. Then it's more difficult to free up that capital to invest in other deals like angel investing. So we think it's going to be tight for a while longer. It may ease up as we start to see real estate interest rates ease up, and the Fed will be driving that.
So, do you see angels moving to later stage deals?
I don't imagine. I can tell you that CTAN is not looking at that. I can't speak for all angels, but I don't imagine angels moving to later stage deals. Actually, I think the opposite is happening, where angels are being compressed somewhat and moving to maybe earlier stage deals. They still won't do the friends and family, but earlier stage. And as VCs kind of move down that funnel and look to invest in smaller amounts of money in earlier stage. So I think there's some overlap now between some of the angel groups that are looking in that Series A space and some of these VCs doing mini VCs and micro VCs doing this smaller round of investing where they're moving into the A space. I think there's some evolution going on there, and it's going to be exciting to see where that goes.
So, is CTAN expanding geographically?
But, that is a really timely question, Hall. So I mentioned that we are actively engaged in growing the number of angels in our community and the number of deals that come in, number of entrepreneurs, aggressively reaching out to the ecosystem. We're the Central Texas Angel Network. We're not the Austin Angel Network. We do Austin and all of the surrounding areas. And it really becomes, how do you define Central Texas? My definition of Central Texas is, I think some of my staff call it the greater Central Texas, because I include everything kind of east of El Paso and west of Texarkana in my definition. So we're reaching out pretty broadly. Sometimes we cooperate with other angel groups who are already in those locations. Where there isn't an angel group, we'll provide that kind of function in their towns. And so we actually have an arrangement with another town who isn't really close to Austin, but we've been working with them for a year, and that press release should come out, I bet, before he publishes podcast. And so, yes, we are working aggressively across the state. We have lots of members at CTAN who are Florida, New York, Colorado. A lot of people in Colorado for some who are members of CTAN. They're just our online members. I call them, They get everything that any other angel and CTAN gets, and that's kind of the only downside to being an online member. But they participate in everything else. But you're going to start seeing us be more engaged, and that happens to a large extent because we're working with the state, and the state isn't just while they're based here in Austin, they're not just focused here; they're focused more broadly, and they're like, CTA, could you come help us over in this part of the state and over in that part of the state? And our answer is always yes.
So, what do you think about crowdfunding?
I love the concept of crowdfunding. I think kind of democratizing the ability to invest is a great way. And I especially love it when, the right kind of companies are crowdfunding, like where you get something, you're investing in something, you're essentially prepaying for a good you want. And so you actually bring about the ability to make that good. And I think that's the best of everything is when a startup has customers demanding their product who are prepaying to get that product. I challenge every company we invest in to be like that. Now, I think there are some areas you have to be careful, right? So you don't want people putting money into these kind of activities who can't afford to lose that money. If they're crowdfunding to get a product, that's perfect. If they're crowdfunding in the belief that this company is going to be 100x return, they need to know that the probability of that is pretty small, right? So even at CTAN, we only invest in about 2% of the deals we look at. We might look at 500 deals this year, and we'll put money into 10 of them. So I think people online who are not experienced investors who crowdfund, that can be a concern. I think people who are aware of the risks, I think it's a cool way to get involved in a company that you love.
So, what are the challenges in this space for the investor? What do you find you deal with every day?
As a board member in CTAN, I'm running, especially as a chairman, I'm running a company. It's a dual-sided marketplace, and I've run dual-sided marketplaces that I'll call it the real world. So I've run dual-sided marketplaces. A lot of what we do over there, we have to do over here, and so it's a challenge to run an angel network. I don't think most people understand how difficult that is. We have two full-time heads here, and they're really smart people to allow us to execute the mission that we're working to execute. And so I don't think most people understand that. As an angel member in CTAN, you get to participate, you get to see this deal flow, you get to vote on this deal flow, you get to invest in this deal flow and support these deals because all of that, I think of it as infrastructure work is done for you. It's just about smoothing that runway so it makes it easy to put money in those deals. But running the network is a lot of work. And I think, you know, we see angel networks come and go. And the reason is, if you can imagine 10 people coming together, they all have one or two deals. They talk about those deals. They invest in the good ones. Great. Then how do you go get the next set? That's where the work comes in. How do you go beyond the ones you just have in your pocket? And that's kind of the big challenge for angel networks. For investors, I'm going to caution anybody, and we all start out just to be clear, every member of CTAN started out as an individual angel, and they made their own individual angel decisions based on whatever criteria they had. I can tell you that the first angel investment I made was in 1995. So that was 29 years ago. I am still in that deal 29 years later. It's got to be the world's longest angel investment. It's mentally, I've written that off. It's gone so long, I've written that off. It's not never going to return money. But every angel on their own goes through that process where they make just bad investment decisions because they don't have other brains to share the load with. They don't have to do due diligence to find the deals, to execute the process. So I recommend all those other angels, and something like 75% of the actual angels in the country are not in an organization. And yet when they compare their returns on investment versus, kind of a well-oiled machine angel organization, the returns are always south of that well-oiled machine because we've got the benefit of having 120 smart people working together to further our interests versus some guy who's gone solo.
Great. So, what's your advice for people investing in startups? What do you tell them to do before they write that check?
I'll tell you what the advice I give my own members of CTAN. One, join CTAN. That's a no-brainer. I used to say if you're within 100 miles of Austin, then you should just join CTAN. We no longer have that geographic limitation. Join CTAN. The second thing I say is don't invest initially. Understand the process, understand the system, participate in the due diligence, but don't invest because every deal looks awesome at the beginning. And you just don't have the experience yet or the scars to make the right decision. So Join CTAN, learn the process, learn the system. After a couple of months, after a quarter, then pick and choose the ones that make sense to you. But join, learn the process, learn on other people's dime. Don't learn on your own, and then start investing.
Great. And then what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
Yeah, I think this is like an hour discussion just by itself. And so, one, you know, there's a ton of information on the web. Do your homework. I can't tell you how many people I've seen pitch that don't have like the 10 classic slides that you need. And I can't tell you how many times people have pitched multiple times and don't have like the basics that I would need to even run the math. Like, tell me how much you're raising. Tell me how much your pre-money valuation or your post-money is going to be so I can decide, is this a good investment or not? Tell me, educate me on the problem first so I can understand what you're trying to do. Then tell me about your product itself. But way too many times I see one slide on the problem and 20 slides on the solution, and then not the rest of the financials I need to make a good decision. So go online, get a list of the 10 pages you have to have in every deck. It's less about making them look pretty, although there shouldn't be obvious grammatical errors and math errors. It's less about making it look pretty and more about sell me on the importance of the problem. Like if you're working on a problem that I can understand the customer must have this problem solved to be successful, I'm in. I'm very excited about that. If you're working on a problem where you have to educate the customer that this is a problem, yeah, that's a lot less exciting.
Great. And so what online information source do you find most helpful in your work?
When we do due diligence, we literally get into the weeds in understanding a company. And so we'll go through the website and we'll not only will we read every page on the website, we'll call everybody mentioned on the website. If you have customers on your website, we're going to call them. If you have competitors on your website, we'll call them. Obviously, we won't divulge NDA level material, but we'll talk to them and better understand. We have 120 members. We'll work. You won't use our network to call people that you didn't even cite were competitors and talk to them about what's important and what's coming up in the future. We use the web extensively to do our due diligence, but we also use it to reach out and contact people to, increase the number of deals coming into CTAN. We do both in person as well as online engagement to bring more opportunities in for us to invest in.
Well, great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think that startups, small businesses especially, but startups in particular, are the lifeblood of any community. And so our focus is how do we find those, help to grow them to kind of bring on the next generation. I think of it as this virtuous cycle. We get them to grow, they grow up, they employ more people, they exit. There's more people in the pool who can become investors now, and then roll that money back into more startups. You know, supporting small businesses and startups especially is, I think, key to success in the next generation.
Great. Well, how best for listeners to get back in touch with you?
Well, we have a website, www.ctan.com. If you have a startup, please click on the entrepreneur page and apply, or click on the calendar page and sign up to attend our angel speed dating. You don't have to apply. You can just come in and get some feedback on your idea and sit down for 5 minutes with 2 or 3 angels and get some feedback on the idea. If you're an investor, come over to the same webpage, click on the investor tab and sign up, or just shoot a note into the contact page and we'll invite you to a meeting. So, even without signing up, you can get a flavor for what we're like.
Great. We'll include your contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Love to. Thanks, all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.